Hey, it's Larry Gaines. We're about 2 weeks here into the new year, 2014, and I wanted to kind of do a review of the market big picture. So take another view of that. I did one right as the year was coming to a close on 2013. So I kind of wanted to go back through and kind of look at the same sectors and everything that I reviewed and some additional ones. But first, starting off with gold. You can see here on the weekly time frame, you've got this pivot low, came in at 1179. Currently, we retested the 1179. So this is a key area of support here, and this is the line in the sand. So if gold can maintain and start grinding higher or break out from this low, then this potentially could be the cycle low for the big move that occurred over 2013. So we can back up, look at that big macro picture, and get an idea from it. So here's the monthly time frame. So still hanging in here. You can see this is a key area. On the macro big picture monthly, the lower studies that we use are still down, but when you flip over to the weekly, they're starting to flatten out and actually turn up. So this potentially could be the low. It needs to be constantly monitored, but if we start getting these weekly time frames pushing higher, a break of this trend line coming in here at around 1282.83, then the market's going to get very interesting, and it could be an area to start jumping into gold. Now you can also keep an eye on platinum here. It's another metal that highly correlates platinum and copper, and you can see on the weekly time frame it's stronger, has broken through a major trend line on the long-term trend, and the daily looks very good as well. So that is for platinum. And then I also want to monitor copper. Here's copper. Major squeeze on the weekly. So if we get a break up here above 338, this could really drive copper, and you can see it pull gold and platinum and everything else along with it. The other sector that I wanted to follow was the FXI, which is the Chinese market ETF. It's in a monthly squeeze. It's been in here since the first of 2013, and it's been trading in a range from 42 down to 31. Currently, you can see on the weekly it's broken this trend line, so it actually looks like it's going to break down and retest potentially this 31.58. So this could be actually a setup here for buying some puts further out to take advantage of this break back to the downside. So that's one I'm going to take note of and look at further out puts, maybe 4 or 5 months out to see what those are going for. Also potentially sell some bear call credit spreads. The other sector I wanted to keep an eye on is the emerging markets. So you can look at the EEM. It's also just like the China ETF FXI. It's been in a monthly squeeze for over a year, and it's currently breaking down. Here you can see it's broken this extension, and it's right into a trend line, so 39.30. So here's a key level of support right here. It's broken below all the moving averages on a weekly time frame. A break of this trend line. Looking for the emerging markets now to retrace back down here to these potentially lows. Let's take a look at the daily real quick. So this could be an area to take advantage of a break lower. So that's another area like the China FXI. And the other sector to follow is the oil and gas sector. It had a nice break to the upside on a macro basis here on a trigger squeeze, compression squeeze breakout back in July, and made a high. It's pulling back into this pivot high extension. The crude oil's had a big pullback, but the oil and gas fund here, this type of things based on oil and gas exploration, trading, mining, and all that kind of stuff, really hasn't been as affected. So this is something to keep an eye on. But with oil pulling back, it could pull back further too. So I just kind of wanted to update that. Next area to keep an eye on is the bond market. So, with the current situation with the Fed taking a little bit of the pedal off the metal, you're seeing bonds pull back, which means interest rates go higher. So on a macro basis, right here on some major support, right here you can see that 102 level for TLT. Now it's been down here testing once, twice, 3 times broke, and I'm looking for this to break lower. So here's the weekly time frame. You can see how it's on this critical extension level. So I'm just going to wait it out here. On the daily, it's retracing back up. Going to look for a retrace up, and then using our model, I'm going to look for an area to get into TLT by buying puts. Now we'll take a look here. This is the S&P 500 cash, SPX. Here's your macro time frame. You can see a big push up the last month of December. Currently very narrow range, pulling back some, a little profit taking, a little squaring of the books, so it's hard to say what will happen. Still in a strong macro trend up, still in a macro trend, a weekly or a long-term trend up. And then if you look at the intermediate or medium term, which is measured by the daily, you can see it's pulled back into this 15 EMA, holding right in here, very, very choppy. So right now, though, holding up above the 15 EMA. If you look at this time frame, you can see the cluster of moving averages that it's holding. Here's your 8, 15, 21. So as long as it holds in here, it still looks good. The indicators have pulled down, so the market has lost momentum. Let's look at the QQQ to get an idea. We'll look at the Nasdaq, actually the Nasdaq 100 futures, get an idea on the technical stocks. Let me pull those up. Now, with this steep move up we've had over the last year, it wouldn't be abnormal to see the market pull back, to retrace back into this area here at 3480 or even 3400 into this trend line on a macro basis, and the trend is still solid to the upside. So we're going to have employment numbers tomorrow. This could have an impact on the markets, but we've had a great move up, still looking strong, still holding some moving averages, but starting to lose momentum. So tomorrow will be an important day on that as far as employment numbers, to see how that affects the market. Let's take a look real quick at the Dow. So again, you can see nice strong, still trend is solid to the upside on the macro, but you can see the weekly here. If we close below the 1630, 16,315, this area in here, look for a pullback into 1620 and then see if it falls through even more. We're really overextended, and a lot of technicians will watch a weekly close. So if you get a close below the prior week's low here, I'll look for another retrace, more of a retrace back into this kind of support zone right here, and then even further down possibly. So it's been a very stock pickers type market right here since we're overextended, but the overall trends are still solid. But it wouldn't be uncommon to see this thing pull back, going into the next week or so, and a big data point comes out tomorrow. So hope this helps. Talk to you on the next update.